Ladies and gentlemen, good day and welcome to Radico Khaitan's Q1 FY24 earnings conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Himanshu Shah from Dolat Capital. Thank you and over to you, sir.
Thank you, Carol. Good afternoon, everyone. On behalf of Dolat Capital, we welcome you all to Q1 FY24 earnings conference call of Radico Khaitan. We would like to thank the management for giving us the opportunity to host the call. On the call, we have with us Mr. Abhishek Khaitan, Managing Director, Mr. Amar Sinha, Chief Operating Officer, Mr. Dilip Bantya, Chief Financial Officer, and Mr. Sanjeev Banga, President, International Business. Let me hand over the floor to Mr. Abhishek Khaitan for his opening remarks. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. Thank you for joining us on our Q1 FY24 results conference call. We have started the fiscal year FY24 on a strong note with prestige and above category brands growing over 27% year on year. This was led by all our core brands such as Magic Moments Vodka, which crossed 1.5 million cases sale during the quarter. Morpheus Premium Brandy, After Dark, Blue Whiskey, 1965 Spirit of Victory Premium Rum, etc. Both consumer and trade response for the new packaging of 8 PM Premium Black Whiskey has been very encouraging, and it has continued its strong growth trajectory. Over the last couple of years, white spirits category in India has grown faster than any other category. In 2006, when we launched Magic Moments Vodka, the category was nascent and gradually Magic Moments became a category creator. Today, it is the 7th largest vodka globally and we hold 60% market share of the entire vodka industry in India. Now we are seeing a similar scenario with the craft gin space. Few years ago, this space was non-existent in India. Jaisalmer is the only Indian brand at this price point in the luxury gin space and has over market share. Capitalizing on the opportunity in the Indian craft gin space with Jaisalmer's success, we have now tapped into the super premium gin category where the industry size is much larger given a more affordable price point. The growth in this segment is also very strong. During the quarter, we announced the launch of our latest addition to the super premium product portfolio, Happiness in a Bottle, a happily crafted gin. The collection features 3 exciting variants: Joy of Juniper, Joy of Pink, and Joy of Citrus. With the introduction of the Joy of Pink variant, we have ventured into the unique pink gin category. While each of these expressions has been curated from a selection of 15 botanicals, standout ingredient across all variants is ashwagandha, a renowned herb known for its vitality and mood-enhancing properties. Happiness has initially been launched in Rajasthan and will be rolled out in 4 to 5 more states in Q2 FY24. This brand will also go on to create a unique position for itself and become a category creator as many of our previous launches. We also plan to launch one more luxury whiskey brand in the second half of FY24. While there have been signs of deflation in certain commodities, the scenario remains volatile for glass and ENA. We continue to cautiously monitor the industry trends. Given the IMFL portfolio premiumization and price increases in both IMFL and country liquor businesses, we have seen our margins improve significantly on quarter-on-quarter basis. Although we have faced raw material pressure in the short term, but that does not impact the mid to long-term growth and margin trajectory. Our Sitapur project is progressing well and in the last stage of implementation. We expect to start commercial production during Q2 FY 2024. Radico Khaitan is progressing firmly on the path of its exciting premium brand creation journey, which will be further strengthened by the backward integrated manufacturing platform. Going forward, we continue to focus on our long-term plans of premium IMFL portfolio expansion with new brands introduction in both white and brown spirits and leveraging the benefits of our capital investments. I would now like to hand over the call to our CFO for a detailed operational and financial review. Thank you, and over to you, Dilip.
Thank you, Abhishek. Thank you everyone for joining us on this call today. During Q1 of FY24, we reported a total volume of 7.36 million cases, which is 8% growth on year-on-year basis. Prestige and above category volume grew by 27.2%. Including the royalty brands, our P&A volume growth is around 33%. In value terms, the prestige and above category registered 40% growth. During FY23, we had rationalized volume of certain regular category brands as a conscious strategic decision to mitigate input cost pressure. With the recent price increases, we have seen improvement in the regular volume on quarter-on-quarter basis. Prestige and above category now account for 36.5% of IMFL volume compared to 29.6% in Q1 of 23. Improvement in IMFL realization is due to the combination of price increases and continued premiumization. On year-on-year basis, there was a 160 basis point impact due to the price increase on our IMFL sales value. On quarter-on-quarter basis, our gross margin improved significantly due to the price increase received in country liquor business. This has also been supported by price increase and ongoing premiumization in IMFL business. On YOY basis, despite significant commodity inflation across ENA and glass bottles, we have been able to sustain gross margins. Although price of certain packaging material have softened recently, we cautiously monitor the trend of ENA and glass bottle where volatility persists. Glass cost increased by over 15% and ENA price by around 8% on year-on-year basis. Other expenses increased due to the track and trace duty, which was earlier recovered from customers and now it is a part of EDP and cost to us. Some of the other expenditure is on account of higher power and fuel costs. Overall, we have a strong financial position, comfortable liquidity. During these times, we are taking all necessary steps to sustain our financial strength, maintain robust business model, and grow consistently, competitively, and profitably. With this, we now open the lines for question and answer.
Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Nuvama Institutional Equities. Please go ahead. Ms. Abneesh Roy, you may please go ahead with your question.
Hi, audible?
Yes, sir, now you are.
Fine. So firstly, congrats on a very good set of numbers. So you have seen very strong growth in the P&A volumes, which is stronger than even the good numbers posted by the market leader. So want to understand what is driving this in particular states. Are you getting a bit more market share? I understand a lot of your premium luxury products are doing well, but would you point out any particular states where there has been market share gains?
So first of all, I must tell you that the P&A segment growth that we are witnessing is across all states and geographies wherever we are present. First of all, Magic Moments is commanding a 60% market share and is on a healthy growth rate of 38 to 40% across all geographies. Secondly, 8 PM Premium Black that we launched in 3 years back is now a 3 million case brand and is very buoyant, well accepted in the prestige category. It is the fastest growing whiskey brand in India. It's available in states like Andhra Pradesh, Telangana, Uttar Pradesh, where Assam, Jharkhand. So it's growing at a very fast pace in all these markets. So besides, as I said, 8 PM Black and Magic Family, which is big, there are other premium brands that we have launched, like Royal Ranthambore, which is very well accepted and started growing at a very rapid rate. So 1965 Premium Rum is now the largest selling premium rum in the defense sector, and in the domestic market, it is now reaching a high market share wherever it is present, and in the days ahead, it will be a brand to reckon with in the domestic sector as well. So if you come to think about it, all the brands are responding. Jaisalmer is doing extremely well. Last year, in fact, we hope to maintain a 50% plus market share. In fact, in the quarter gone by, you will be surprised, we have a 70% plus market share. So it's a very encouraging response to all our premium brands, and this growth trajectory, margin trajectory is there to stay. Thank you very much.
Sure, thanks. A very quick question. Now again, UK FTA talks seem to be in final stages. It has been in final stages for 2 years, so don't know when it will come. My very simple question is, will any of your brands get impacted by this, and would you be concerned on this, if at all it happens?
So first of all, let me tell you that the UK FTA is on the cards, and like the treaty that has been struck with Australia, where the interest of domestic industry has been well protected, we know that the government of India will protect the domestic industry. However, I must tell you that as far as Radico is concerned, it's a unique situation where we are breaching all price points in the premium and luxury categories, moving up and up on the price ladder, and we don't really see a great impact with the UK FTA impacting our brands.
Sure. My last quick question is on the 2 key raw materials. So on glass, the number one beer company said that for the balance part of this year, at least the next 2 quarters, they don't expect any meaningful correction. Would you also have the same thought process? And on ENA, with all this very high inflation in rice and government regulations also saying that ethanol in terms of grain usage, etc., some restrictions. How do you see inflation in ENA for the balance part of the year?
So the glass prices, as you know, has been given increase 2 times last year. I think we don't foresee any more inflation in the glass prices. Rather, some correction have taken place in recent past. As far as the ENA is concerned, yes, the grain prices have been on rise, but we see this is a matter of 2-3 months, first of all, because when the new crop comes, the prices generally comes again on the declining trend. Secondly, as far as the government FCI policy on the ethanol is concerned, there is an interaction going on continuous basis between the industry and the government, and I think it should also get resolved. So we see some inflation in the till October, November, and thereafter it should be again on a normalizing trend. But yes, the commodity is volatile.
Good, sir. Thanks. That's all from me. Thank you.
Thank you. The next question is from the line of Ashwani Kumar from Edelweiss Mutual Fund. Please go ahead.
Good afternoon, sir. Sir, how many states have allowed a price increase for you people in the last 2 quarters, especially in this quarter?
So there are 8-9 states who have given prices. The bigger one is Telangana and all that. Last year also we got the price increase. We said in earlier call also that weighted average, last year we got a price increase of 300 plus basis points, and whatever price increase materialized till Q1 of FY24, the weighted average impact of that on the top line will be around 170 to 180 basis points.
But the positive side of this is that 10 states have given price increase which will impact FY24, and the government in most states have been very receptive to the pain of the industry. So that's a very positive sign for our alcohol sector.
And sir, even in just this quarter itself, you made very strong margins of roughly 12.5% against 9.8% in the last quarter. I mean to say 4Q23. So what is the kind of margin which you'll make for this entire year?
So as we have already spoken and guided that we expect the margin for this year to be in the kind of teens, mid-teens kind of things. So we continue to maintain that guidance, 14 to 15%.
14 to 15%. And do we expect to go back to the margins of roughly FY21 or FY20 in the range of 16 to 17% by when, if at all?
So we agree that in 2 to 3 years' time, we aspire with this kind of brand portfolio and premiumization and premium brands growing in strong double digits, that late teens margin in 3-4 years we are expecting.
And so by when is our ethyl alcohol plant expected, the expansion which we were doing?
So the greenfield Sitapur plant will come into operation in the Q2 of FY24.
Q2, and by what capacity we will reach by end of FY24?
So it will be around 95 to 100% capacity by the end of FY24, because plant stabilizes in a couple of months and thereafter it runs on 95 to 100% capacity.
Okay. And any other capacity expansion expected at the end product or at the RM on the RM side?
No, we don't expect any more expansion on the distillation side. We have had this expansion keeping in view 5 to 7 years requirement for our P&A category and other growth in like regular and whatever in consumption is growing. So we will have distillation capex for complete for next 6 to 7 years.
Okay. And what's the current debt on the books, sir?
Current debt is 700 crores. Net debt is 700 crores.
Okay. And what is the repayment schedule for the debt?
Next 4.5 years, the debt will be actually as per schedule. However, as per our plans, we expect by 26 we should be negligible debt to a zero debt kind of company.
And sir, on the current sales of or on the current profit of roughly 60 crores a quarter, what is the kind of FCF or the OCF we generate?
So FCF on the current this thing, as we said that after meeting the needs of the capex and working capital requirement, the FCF we will be able to generate that, by which we will be able to retire the debt.
Okay.
Because this year, next year, and by 26.
Okay, got that. Thanks a lot, sir.
Thank you. The next question is from the line of Sonal from Bowhead. Please go ahead.
So thank you for this opportunity. Sir, could you repeat what is the EBITDA margin guidance you gave for this year, and does that include the benefit of backward integration, or this is excluding the benefit of backward integration?
So the EBITDA margin still doesn't have the impact of the backward integration as far as Sitapur Greenfield is concerned. As we said that by the year end, when we have every operations of Sitapur and everything, we will be in the mid-teens kind of EBITDA margin.
So this mid-teen margin includes Sitapur, right?
Your voice is little cracking or something. Can it be more clearer?
Sure, sir. Is it better now by any chance?
Yeah, it is little better, yeah.
So this mid-teen margin which you're talking about, so it's more like a Q3, Q4 kind of guidance, including the benefit of Sitapur backward integration, right?
Yes.
So it includes the Sitapur. Got it, sir. Secondly, sir, in terms of you said something about the glass prices. So are you expecting a correction or it's already happened in Q2, or are you expecting Q3, as far as the glass prices are concerned?
No, I don't think we expect that in our business model. If it comes, it will be good. We're working with the glass industry on that, but let's not expect that.
And whatever price hikes we have taken so far, sir, in various states, some of them may have come mid-month last quarter. So any further benefit of historical prices which will flow through in Q2? And what will be the quantum?
So the impact in the first quarter has been in the range of around 90 basis point to 100 basis point because Telangana come in the middle of the quarter. As I said that overall on annualized basis the impact is 170 to 180 basis points. So the balance impact from Telangana and some of the states is going to materialize in coming quarter, and weighted average will be in 170 basis points.
Thank you so much.
Thank you.
Thank you. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Good afternoon. I had a question on Popular. So, you've seen a sequential uptick in volume growth on volume on the Popular side. So, from here on, given that, your portfolio, the impact of, high inflation that you would have reduced the salience, that would have gone out. Would you expect Popular also to start delivering volume growth from here, from Q2 onwards?
So, Harit, as you've seen that some of the states where the price correction have been done, I think we have again on quarter-on-quarter basis started giving and servicing the market. It is 9% on quarter-on-quarter basis. As we said that our focus is on the P&A category. We expect as a regular category to grow in mid-single digit, and we continue to maintain that.
Got it. Very clear. The other question was on, on the gross margins. If you look at, this quarter, you've seen a sharp increase, and driven by the country liquor price increase as well as, your mix improvement. And obviously you are expecting, your 12.5 EBITDA as the year progresses to move to 14 to 15. Just wanted to understand that progression. Would that largely be driven by further mix improvement from here, or you think the bulk of this incremental benefit will come from the Sitapur, backward integration?
No, it will be a combination of both. First of all, the product mix is improving as luxury and other brands which has been growing in 40% kind of thing, which is giving us better margin. Sitapur backward integration will also give. So I say that combination of all the factors will bring us to mid-teens kind of margin.
Got it. And last, bookkeeping one was on the depreciation. Does this quarter depreciation fully, reflect the Sitapur CapEx?
So as this quarter depreciation is around 24 crores and Sitapur will get capitalized in Q2 of FY24, we expect the annualized run rate on depreciation to around 125 crores. So 32 crores quarterly.
Got it. I have some more. I'll come back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Sandeep Jain from Baroda BNP. Please go ahead.
Yeah, thanks for taking my question. Just one clarification. The 15% margin guidance which you are giving, it's exit quarter margin or you are saying full year FY24?
The exit quarter margin.
There is an exit quarter margin. Okay, and it includes the benefit of the plant which is coming, maybe probably second half or so. That includes the benefit in the EBITDA which will come from the raw material sourcing and all.
Yeah, it's combination of all backward integration as well as the brand side.
Okay. Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Kaustubh Pawaskar from Sharekhan. Please go ahead.
Yeah. Good afternoon, sir. Thanks for giving me the opportunity and congrats for a good set of numbers. Sir, can you let us know what was the industry growth for this quarter? And if you can help us with various segment growth, for example, what was the growth for white spirits, whiskey and rum category? How this category, grew in this quarter?
So the industry in this quarter has actually grown by about 5%. And the coming quarters should see a resurgence further.
Okay. And if it is possible to give us the segment-wise growth, like how the white has done for this quarter and the whiskey segment, how they have grown.
Okay, if you would want segment-wise growth, I can help you with that. Whiskey has grown by about 4%. Rum has grown by about 5%. Gin has grown by about 5%. Vodka has grown as an industry by 15%. And brandy has grown by about 2%. So there is an overall growth of 4 to 5% of the industry.
Right. So our growth in P&A is around 26 and overall volume growth of around 8% is ahead of the industry. But especially in P&A, we have seen that our growth has been better than the earlier guidance of around 15 to 18% what we used to give. So considering the response you are getting in various markets and the launches you are planning to do in the quarters ahead, should we enhance this guidance to around close to 20% in the coming years because of the market share gains and the response what we are getting into the various markets?
So we continue to maintain the guidance of 15 to 18% growth in P&A category consistently every quarter over last year. And as far as the regular is concerned, we still maintain that mid-single digit growth. Overall growth we expect around 9 to 10%, and on top line it is 15-16%. So the growth can be higher, but as far as we maintain this because we believe in it. The first quarter we have grown 33% if we include royalty brand. But that's a market demand and everything we are catering to that.
Right. And for the overall realization growth in this quarter, what would be the growth because of the improvement in the mix?
So the realization improvement is 400 basis points in this quarter over last quarter.
Okay. And what could be because of the mix? The mix and the price increase? You said price increase impact would be around 80 to 90 bits. So
yeah, rest is product premiumization.
Okay, got your point, sir.
Thank you. The next question is from the line of Shivang Joshi from Centrum PMS. Please go ahead.
Hello. Thank you for the opportunity, sir. I hope I'm audible.
Yeah, audible.
Yes, sir. I wanted to understand, can you give an indicative range of gross margins that you would be making on the IMFL and non-IMFL? And just a clarification, since you've got the price hike in non-IMFL segment, you would be back to what high single digit EBITDA margin in that space, or is it higher during the quarter?
So the gross margin, I say that EBITDA margin on our non-IMFL is in the range of around 6%. On IMFL side, it is 15% for this quarter. Gross margin on non-IMFL is around 9.5%, and it is above 50% in IMFL category.
Okay. Okay. So, I remember in one of our earlier conversations, so this luxury or crafted products, the super premium category, super premium and luxury products, can you give an indication of what they would be, in terms of overall revenues, any indicative number, how much they would be contributing for our revenues in the quarter, or how much do you expect them to contribute in FY24 versus FY23, since you will have higher availability of ENA for your luxury products this year?
See, in the luxury portfolio, we do not give any guidance on revenue or anything, but what we can say surely that now, especially with the increased capacity of Rampur and the way Jaisalmer is responding, both internationally as well as in the domestic market, in the next 1-2 years, it will significantly contribute to our bottom line.
Okay. So the intention is just to understand. So in FY20, FY21, when we used to do 50% plus gross margins, we have substantially taken up our portfolio in terms of premiumization. Yet when we see the gross margin levels, the gross margins still appear to be roughly around 43-44% on a blended basis. This is first quarter after receiving the price hike in non-IMFL. Now, I understand your entire raw material basket has been witnessing major inflation, but as things smoothen, so when do we expect your gross margins to touch the earlier levels of closing close to 50% on a blended basis?
As you are right that in 21-22 we had a gross margin between 49 and 50%. Last year, FY22-23, the inflation on grain and glass prices taken away almost 900 basis points from the gross margin, which has been compensated by price increase and product premiumization. Now, nobody can predict about the commodity prices. However, with the current state of the commodity pricing, I think the current margin is around 43.5. We expect again go back to these 48 or kind of margin in 2 to 3 years time with the product premiumization. So the point is this is all being made good from the product mix. Had not been there, then margin would have been upward of 50%.
And your benefits of backward integration would also kick in higher gross margins, right? When you're saying 48 to 50%, should we assume a even higher number when we factor in the benefits coming from the backward integration? And currently, what is the spread between make versus buy?
So for us, the backward integration is part of the total business model because we are going to use whole of the ENA captively in 3-4 years time. So for the margin which we are expecting is combination of the greenfield, the backward integrated facility and the premiumization, both put together.
Okay. And currently, if you at the current ENA pricing and the raw material cost, what would be roughly the gap between make versus buy per liter, if you can give any indicated number?
Currently, the ENA is in the range of 69-70 rupees per liter.
So we should get
on landed basis.
Okay. So 10 rupees per liter should be the ballpark benefit that you should get.
It ranges 8 to 10 rupees, sometime 8, sometime 11, 12. So it depends on the grain prices.
Yes. Thank you so much. for answering all my questions. And
Thank you. The next question is from the line of Tarun Taurani from Elara Capital. Please go ahead.
Hi. Thanks for taking my question. My question is on the regular segment. You mentioned that growth in volume could be, mid to high single digit over there. With the decline in Q1, could we expect that H2 recovery will be sharper in terms of the regular volume, and what would drive that?
So the point is we have started for after 4-5 quarters sequentially the improvement in our regular category. And the 5% which we talk about will be for the whole year based on the business plan. Some of the price increase in the regular category has come in. If some more comes in, we continue. But our focus, as we talk about, is on the prestige and above category, where we, with the current buoyant product mix and premiumization happening in the country as well, we're expecting a strong growth there.
Right. And the second question was on backward integration. So I think we mentioned earlier that the positive impact of this backward integration is somewhere close to 150 to 180 bips on the EBITDA or the gross margin. Now with this wheat prices, going higher or other grain being under pressure, do we maintain that guidance of positive impact?
So first of all, this is again a temporary phase because the rise in the grain prices has been abnormal in last 3-4 months. But we don't expect that the commodity prices continues to be the upward of this. So when we guided about 150-180 basis point, it was in a normal circumstances. It is like the earlier the own versus the bought out ENA was around 12 rupees. Today it is 8 to 9 rupees. So it varies. But the point it is a matter of 2-3 months. Thereafter again when it normalizes, it will come back.
Right, thanks. And just the third and the last question would be, around the potential market share within the prestige and above segment in the whiskey category. So as you said, 8 PM Black, you are seeing traction. You are seeing traction in other brands like Royal Ranthambore as well. But any update to kind of, innovate within the mid and the upper prestige segment or maybe in the luxury segment to compete with peers over there as well, like Pernod?
So can I take this one? See, I'll tell you what, if you look at the industry, how it has behaved in the P&A category, the P&A category has actually moved up 1% from 21% to 22% of the total IMFL sales. Whereas as far as Radico is concerned, our share in the P&A category has moved up 2% points from 13 to 15% of the industry. So Radico is growing in the P&A category much faster than the industry. That's purely because we are focusing on premiumization, and this trend shall continue.
Right. So let me put it this way, like apart from 8 PM Black, which are the whiskey brands that you are betting upon for getting this strong P&A growth within whiskey category? Yeah.
Okay, so let's say, we were not a dominant player earlier in the whiskey category. We have a leadership position in the gin, in the vodka, in the brandy segments, all premium segments. And now it's a year of transformation where whiskey is becoming a mainstay. 8 PM Premium Black was 1 million in the first year, 2 million in the second year, 3 million in the third year, and we are betting strong for the 4th million in the coming year, in this year. Having said this, Royal Ranthambore is the big future brand of this country. We are looking at doubling our volumes in the current year, and it's been very well accepted, doing very well across all markets that we have gone and launched. And it is the first Indian whiskey. We claim it is the finest blend ever made in India. It's the first Indian whiskey which is competing with international brands, priced higher than them. So that's a big one that we are betting on. Then there are some other whiskey brands like After Dark Blue, which has been launched in some states, and it has been very well received. But I would say 8 p.m. Premium Black and Royal Ranthambore just now, and what is going to happen is that the industry would be surprised because in the Q2, the second half, not Q2, the second half of the year, we come up with another luxury whiskey to enhance our portfolio.
Got it. So there is a plan in place to expand the whiskey portfolio as well, apart from the gin and vodka, where you have a significant recall.
Absolutely.
Got it. Thank you so much. That's my.
Thank you. The next question is from the line of Vikas Tulsian from Vision Ahead. Before that, I'd like to remind participants, if you have a question, please press star and one. Over to you, Mr. Tulsian.
Yeah, sir, my question is that how your brands are doing internationally, and which of your brands you expect that, which of the luxury brands you expect that they will do better in the overseas market, like Rampur, Royal Ranthambore. And sir, my second question is, how do you, after your successful launch of ready-to-mix vodka in Karnataka, so how big you see this as a product category? And sir, how was your July month? Third question.
All right, so let's talk about first the luxury portfolio and more so in the international markets. Rampur, as you know, has been an all-time favorite with the people outside of India as well. And we have at the moment about 8 expressions of Rampur in the international market. Key markets include US, Europe, Middle East, Australia, Singapore, and the travel retail is also a very significant channel for us. The brands are doing exceedingly well, and we, as we've always been saying, we are unable to meet the demand because of the malt availability, but we addressed that couple of years ago when we tripled our malt distillation capacity. A lot of malt is going to be available as we go forward in this year, and we've maintained this year we hope to triple the volumes of our Rampur Indian single malt this year compared to last year. Same is the situation with Jaisalmer. We had the Jaisalmer Classic, and then late last year we launched the Gold Edition. Both the expressions of Jaisalmer are also doing very well in the international market and even in the Indian domestic market, where we have more than 50% of the luxury gin space over here. Sangam, the new world malt that we have just introduced, the first shipments have reached a couple of markets now, and hopefully we should get the feedback and response, and we will be expanding that also in the very near future. So in terms of our luxury portfolio, even Royal Ranthambore is doing very well in the international markets as well as travel retail. So we are very positive of the performance of our luxury portfolio in the international market.
So you just asked about the RTD. So let me just give you some information on that. Cocktail, Magic Moments Vodka Cocktail has been launched in 330 ml cans. We have deliberately avoided bottles because it appeals to the younger target audience and is the emerging trend. It's in 3 flavors, Cola, Mojito, and Cosmopolitan. It has been launched largely to capitalize on the growing cocktail trend and the RTD increase after the pandemic. The culture of drinking at home with friends has gone up, and that's what we want to capitalize on. The market, actually, you will be surprised, in the 2 years, between 21 and 22, has grown by 39 to 40%. Between 2017 to 2022 to 2027, the projection is a growth of CAGR of 10%. Now, traditionally, what cocktails in the country have always been made from vodka. So we have seen this as a big opportunity to use the biggest vodka brand, Magic Moments, to create the biggest RTD brand, which is Magic Moments Vodka Cocktail. It's a great product, well received in Karnataka, and now seeing the response, we are going ahead and launching it
in 4 states as we speak, which is J&K, Rajasthan, Goa, and soon to be launched in more states in the south, north, and east India. But over the next 12 months, it should be a national product.
And sir, can we also expect similar product in other liquor ready to mix like in whiskey and other gin, wine?
We don't have any such plans right now.
Okay. And sir, how was the July month?
So we continue to have this, and I think quarter on quarter at this point of time, as we have guided, that we will complete our targets for on an annualized basis.
Okay. Thank you.
Thank you. The next question is from the line of Abhijeet Kundu from Antique Stock Broking. Please go ahead.
Yeah, hi. Great results. Congratulations on that. My question was on the luxury portfolio. Post the capex that you are doing of backward integration and a better quality in ENA and malt, to what extent does this suffice your volume expectations? I mean, if 8 PM has to grow at a strong rate, or Royal Ranthambore, which is more of a Indian whiskey, and is really seeing very strong growth, what kind of volumes till what kind of volumes is your current capacity or post capex capacity good enough to support, so that you don't have to reinvest further?
So in fact, the backward integration has been taken as a strategic call to grow our branded business. And first of all, at this point of time also, we procure around 7 crore liters of alcohol annually on logistic season, other reason in various parts of the country. So it's in future also our own ENA, which will cater to our production and the growth. We will continue to buy some of the alcohol outside also. And I can't put at this point of time the number that it will be able to cater. We are doing 32 million right now. The growth what's happening in India continues to be there. So we said that it will be sufficient for next 7 years that we have our internal distillation capacity, and some of that will be outsourced from outside producer as well. So we don't see the constraint of the capacity of distillation in future.
Okay, got it. Yeah, I asked that because even in a brand like Black Dog has become a 3 million cases black. I don't see why Royal Ranthambore can't achieve that in the next 2 years, 3 years. Because it's going at a very rapid pace.
So no, Royal Ranthambore is a star product of the country today, not only Radico. The response is extremely encouraging, and I can assure you that in the times ahead, it's going to be a brand to reckon with.
Yeah, great. Thanks. That's from my side.
Thank you. The next question is from the line of Pankaj Kumar from Kotak Securities. Please go ahead.
Yeah. Thanks for taking my question, sir. My question pertains to the impact of Karnataka, where we've seen the duty increase. So how do you see on that, and what volume that Karnataka is contributing to us?
So the Karnataka duty increase definitely is steep increase, and with this increase there is bound to be some impact on the volume side. But as we have seen in the past also, that duty increase and the new MRP and all that adjusted in due course of time. I think in next 1 to 2 quarters, again, the volume which might get impacted because of the steep increase in duty will get adjusted.
And just to add one thing, Karnataka is predominantly a regular category market. So from a overall Radico strategic focus perspective, it doesn't impact much.
Okay. And what percentage of volume coming from there?
It is around 9 to 10% of overall volume.
Okay. Okay. And so my second question is related to the other expense increase, which you have said earlier, like due to some change in track and trace thing. Can you elaborate more on that? What
So
exactly?
the excise policy which was announced in Uttar Pradesh, earlier we were getting reimbursement from the customer. Now it has been, so it is a cost to me. Earlier it was part of the EDP. No, earlier it was charged to the customer. So this is now being part of the other expenditure.
So comes in the revenue as well as the cost side.
Okay. And so lastly, on the Royal Ranthambore, you said you're looking to double the volume from this particular brand. So by when you intend to achieve a million case, any internal target that you have on Royal Ranthambore? That's my last question.
So see, it's operating in basically in a very, very premium segment, which is the Scotch segment, and there we are seeing a very good traction for it. I think we need some more time. This year we should double our volume. I think by next year we should be able to actually project our volumes for the next 3 to 4 years.
Okay, sir. Thank you.
Thank you. The next question is from the line of Mayur Gatani from Om Portfolios. Please go ahead.
Hi. Thank you for the opportunity. I just wanted to have an update on Delhi. What is happening there? Is there any improvement?
So Delhi right now is a stressed market. The policy is yet to settle down. It's still going through its own highs and lows. We are actually getting a reasonably good volume, and we are happy with it. It's not much of a botheration, but the industry needs to actually work out a solution with the government on the policy. Maybe in the coming policy year, for sure. Right now, the market is struggling.
Okay. So how much does Delhi contribute to your revenues? I mean, is it a significant market?
It is in the range of 2.5%.
Oh, okay, sir. Thank you very much.
Thank you. The next question is from the line of Darshika Khemka from AV FinCorp. Please go ahead.
Hi, thank you for the opportunity and congrats on a good set of numbers. Most of my questions have been answered. I had just one last bookkeeping question. You'd answered one of the participants regarding the EBITDA margins by segment. Could you please repeat that?
Sorry, can you repeat the question?
IMFL and PNA. The EBITDA margins as per non-IMFL, IMFL, and PNA category.
Yeah, so IMFL blended EBITDA margin is 15% and non-IMFL 6%.
And for the regular and PNA?
So we don't actually give that, but definitely premiums are much, much higher than regular.
That's it. Thank you.
Thank you. The next question is from the line of Anurag Jain, an individual investor. Please go ahead.
Good afternoon. My question is on the non-IMFL business. The non-IMFL business revenue was 248.6 crore in the quarter gone by. Could you please throw more light on this business? What is the current position and medium-term outlook for this business?
So the non-IMFL business, because we have put up a facility at Sitapur, so there is a bottling capacity put up for UPML and CL as well. So the growth in non-IMFL has been on account of that. We have seen a volume growth of around 31% on YOY basis and around 11% on Q-on-Q basis. There has been a price increase in the range of 15-16%, which has also been reflected in the revenue numbers. And UPML prices are higher than the CL prices, so there is some impact of the product mix as well.
So just to add to what Dilip said, See, the non-IMFL business in UP is a compulsory evil. We have to do it because the government wants us to do it. All distilleries are mandated to do it. And the important point that I want to make is that it's a business that is doing pretty well in UP and growing. And we hope to stay with that.
All right.
Thank you. The next question is from the line of Vikas Tulsian from Vision Ahead. Please go ahead.
Sir, can you also give up your export breakup, how, in terms of total percentage of the sales, what is export and what is the domestic sales?
In terms of volume, it's about 4 to 5%. In terms of value, it's about 8 to 10%.
And sir, what do you expect in next 5 years, this export market?
Well, it's all dependent upon the mix that we do in the domestic and the international. So it's always a healthy competition that we keep having internally. But we expect both domestic and international to keep growing at a rapid pace.
So which one will grow faster, export or domestic?
Too difficult to predict. Because domestic would like to grow faster than export, and export would like to grow faster. But eventually, it's Radico that keep growing.
Okay, thank
you. Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for their closing comments.
Thank you everyone for joining us today. We are confident of maintaining our long-term margin expansion given the premiumization of our portfolio and recently received price increases both in IMFL and non-IMFL segments. We look forward to interacting with you on our next earnings call. In the meanwhile, if you have any queries, please follow up and feel free to write to us. Thank you.
Thank you.
And over to you.
Thank you. On behalf of Dolat Capital, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.